I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Welcome, everyone. It's good to see you all. We don't have any main real revisions to the agenda, so we'll just hop right into it. Future board meetings are September 13th and 27th and October 11th, all here at 6 p.m. Under public recognition, we have a recommendation to approve a $225 donation from Wabash Elks for Northfield Cross Country, and a recommendation to approve a $15,000 donation for the 2022-2023 academic year from Ford Meter Box. That is something they do for us every year, and it's something that is greatly appreciated. So we appreciate the Wabash Elks for their donation and Ford Meter Box for theirs. But officially, we have to approve those into full. So I'll somebody make a recommendation on a motion on that.
I move to approve those donations.
Second that.
Motion and second to approve the donations from the Wabash Elks and the Ford Meter Box. All in favor, say aye.
Aye.
Moving on to school recognition.
Yes, I just had a couple, Mr. Daisy. First of all, actually both of them are from Mr. Martin at Sharp Creek. First of all, Sharp Creek students and staff would like to thank our custodial staff of Howard Goshert and Tim Smith for the time and effort keeping our building clean and safe. We also appreciate the important work of Mr. Steve Holly and his maintenance crew. And also, welcome to our new staff members for 2022-2023, Cami Ross teaching 3rd grade, Jacob Watkins teaching 6th grade, and Melissa Metz working with students of various grade levels as a paraprofessional. We're glad you are here. So that's all I have for today.
Okay. So we will move to the public comment. If there's anybody that would like to make any public comments. Okay. That was for agenda items only. We'll open it back up here in a little bit for all items. Moving on to the consent agenda items. First up is the approval of the minutes from our last meeting on August 9th.
I move to the minutes.
We'll second that.
Motion and second to approve the minutes from our last meeting. All in favor, say aye.
Aye.
Okay. Financials, claims.
I have no important questions.
Every
Always have questions.
Every important question. Every question's important.
I'll move to approve.
I'll second that.
Motion and second to approve claims as presented to us. All in favor, say aye.
Aye.
Okay. Payroll.
Nothing to talk about payroll. That actually concludes the final payroll for the 21-22 school year. So the August 30th pay will be a reflection then of payroll for 22-23 school year.
I'm going to accept payroll.
Second.
Motion and second to approve payroll. All in favor, say aye.
Aye.
Okay. Cash flow.
We talked about end of the month balances already at the last board meeting, but this is just a representation of cash flow. If you scroll down a little bit, we sit at almost 8.2 million in our education fund. And if you look at the progressive months, you can continue to see that to be built up there. So that's always a good thing when you're not losing money. So we're looking in good shape when it comes to our education fund. And then as far as Actually, go back to the education fund for a second. I'm gonna highlight a little bit of this when we talk about my presentation earlier. But if you look at transfers out, you notice that we transfer money from the education fund to the operation fund. And we do that for the mere purpose because our operational fund revenue does not cover all of our operational fund expenses. And so you can see, we've been doing about $165,000 a month. That puts us around 11 to 12% of our revenue goes into our operation fund to cover those costs. So, you're looking, this is about what we typically do, around $1.92 million a year. We're transferring money out of our education fund to cover those expenses that are not covered by the revenue that we receive in our operations fund. So I just want to kind of make that point a little bit. I think everybody understands that. It's just been part of school finance now for the last few years in covering those costs when they made those changes to the fund.
How much does the state allow in that percentage?
15%. You're not supposed to do more than 15%. And we've been historically around 12%, 12.5%. And right now we're actually under 12%. So we're probably going to increase that a little bit more because we obviously want to make sure that we are covering our costs in our operation fund and not trying to absorb all of those costs in our operational fund because that takes away from things like capital projects and so forth. From the operation fund side of things, if you look at our fund balances,
Which one? There we go.
you can see we're sitting at about $6.5 million in our operational fund budget, but that cash flow works a little differently because the big thing that our major revenue source comes just twice a year, and that's when the taxes are paid out, and so June and December, and so you see big bumps in cash flow, and then you see decreases because you're spending more in those other months, and then at the end you see another big increase there. So anticipating ending around $6.8 million or so when it comes to our operational fund balance. Any other questions with cash flow?
There are some salaries out of operations.
There are.
Yeah,
There's, I'd say probably 60% of that budget is for salaries.
Yeah.
And you're talking, your bus drivers, your custodians, your maintenance staff, those type of costs from a salary perspective.
sometimes that's not understood.
Yeah.
It looks clean and
Yeah. So that's all I had with that. So then I guess that can get us into our 2023 budget review. We've covered all of our estimated budgets for 2023. I want to talk to you tonight a little bit about what they call the Form 4 review, which basically entails our tax rates and how that is determined for our 2023 budget. So we all understand how taxes are used and created. And so if we go through the slides here, some things that you always want to look at when we talk about tax rates is the first thing is assessed valuation. Okay, so assessed valuation, when it comes to your property, that determines how much of that tax rate then that is you're paid in your property taxes. From a school standpoint, it's similar in the fact that it controls the tax rate that the school entity puts out is affected or determined by the assessed valuation. Okay, that's one component. School districts have no control of what the district assessed valuation is, but it is a factor in what helps determine tax rates for the school district. The other factor that is a big determinant in tax rates is the levy, and that's schools do have control over that. They don't have total control over it because there's things put in place that caps those so that you can only tax so much. But we do have control over the levy, and the levy is the amount of money that we're asking for to cover our budget. And the two budgets that depend on taxes are our operation fund and our debt service fund, okay? And so those two funds, we determine an amount that we need to fund our budget for, all right? And then that levy, along with the assessed valuation, will determine the tax rate when that is put into place.
So the higher the assessed valuation, if the levy stays the same, then the rate can go down.
Right, so it works like on a seesaw, right? And so,
Just want to clarify. I mean,
Yep.
I understood that, but I just want to make sure that we were all on
yep,
the same page.
so, the assessed valuation, and to your point, Todd, if you go to the next slide, you can see that the higher the assessed
Right.
valuation, as long as the levy remains the same, okay? So if we ask for a $5 million levy, for example, the higher that assessed value is, the lower that tax rate's gonna be, okay? If we ask for $5 million and the assessed value is lower, then that tax rate's gonna increase so that it covers that amount that you're needed to fund your budget.
Next time, can we add pictures like different people so we can?
Peter Totter. So we always want to look at our assessed valuation and the history of our assessed valuation, because that's a determining factor on when we build our budget. You know, if assessed valuations are going up, that's a good thing when it comes to the tax impact. So we look at our assessed valuation over time, and we can see that it's increasing. It's sometimes easier to look on a graph. So if you look at the next slide, this is a graph historically of what our assessed valuation has been over the past 10 years or so, or actually a little bit more than that, 12, 13 years, okay? And you can see dips in it. You can see a time frame from 2009 to 2015 where it was on the increase. You can see a time between 2015 and 2021 where there was some ups and downs. And you can see now we're in a position where that is increasing, okay? From a business manager standpoint, if I look at this, I would be suggesting that in those times that assessed valuation is increasing are times that we want to consider, I don't want to say spending money, but looking at what projects we have, what our debt sits at, so that we can do things that maybe not be so much of a tax impact on our taxpayers, right? So that time between 2009, 2015 might have been a good time, okay? I would have suggested that's a good time to really look at our debt, see what we have, see what we need to do from our building standpoints so that we can do things and maybe have very limited impact on the taxpayer. And so as you can see, I feel like we're getting into that kind of window there where we're seeing an increase in assessed valuation, where it's very important for us to look at where our debt is at and look at what projects we need to do so that we can make just a conscious, good decision on how we want to improve our facilities, all right?
That anticipated 2023, are some of the numbers in the formula already? How was that projection done?
So
Where'd it come from, I guess?
that comes from our county auditor of what our assessed valuations are most likely to be. That doesn't mean that they're gonna exactly be that, but that comes from the county auditor, okay? And so that's what we use then when we're building out our budget. From a tax
Percentage-wise,
perspective.
that's gonna be a significant percent increase.
Yes,
I didn't know the farmland component coming in will drive that even further. probably
Well, that,
22.
I would assume that would have factored that in, that 857 million would have that all factored in.
For this past
For
year.
2023.
Right.
Yep.
But I was asked today, or thought of today, in the agriculture land value component, there's also some kind of other numbers besides just real estate value, is there not? It's, Jim probably knows, it's a gross dollar kind of thing.
There's some production and, the calculation's much more convoluted, but that it impacts that. And we're also seeing that, like I think you're suggesting, is that the farm base value has started to climb again. And then ultimately that, will be going into next year and so on. But this year, that number reflects the start of that process of,
Because there's a short lag time,
Yeah.
is there not?
yeah, it's a lagging indicator.
And so if you go to the next slide, this was the study that we had Policy Analytics work on us as we were looking at the future. And this was their projections based off of all the information that you're talking about there. And what assessed values may look like in the future for the corporation. And you can see they have it increasing as well. And this projection actually is not increased as quickly as what the actual may end up being from what we got from the county auditor. So that's good when it comes to, like we said, higher assessed valuation, lower taxes when it comes to our calculations to fund our budgets. That's all I have for that. As far as our corporation assessed value is concerned, we can compare it. We've done this in the past. We compare it to our border schools. That's usually the easiest to do. And you can see Huntington County has the highest assessed valuation. And then follow down there through that. And then you can see even there's a little dot there. Those dots represent what the corporation assessed value is per ADM. So per student, you can see that from an assessed valuation standpoint, our district is pretty strong when it comes to the number of students that we have per assessed valuation.
Yeah, I personally found that interesting and enlightening a little bit.
So you go to the next slide. This is a historical view of our tax rates since 2012. The different bar charts represent different things because of different funds that were around during that time. But the two funds that we deal with now that are related to taxes are the debt service and the operational fund. Some districts have a school pension debt. We no longer have a school pension debt. We paid that off, it looks like in 2017, so we didn't have any pension debt in 2018. So we only have the debt from any money that we borrow for projects, and then rates for money needed to fund our operation fund. This is kind of hot off the press. I always like to listen to Larry DeBoer. I don't know if you guys are familiar with that name. He's an economist from Purdue. He doesn't work for Purdue anymore. He's retired. But he comes and talks, and I hadn't been to a presentation in a while, so I asked if they had this information. So he shared it with us. But this just kind of shows property tax rate percentiles for 2022. And it just kind of shows, counties, cities, towns, and schools would be more to my interest. And then it just kind of shows our 2022 tax rate was 83 cents and where that falls in the state from a property tax rate comparison. You can see we fall in that lower 25th percentile. 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 25th percent Locally, we can compare from our border schools, again, using the same comparison. For 2022, you can see locally, then our district has been, or is the lowest, and historically has been one of the lowest in the areas. I just throw this up there as a comparison. I just kind of like to look at it. What this comparison does is it shows what the tax rate is, and then what the levy amount that is generated from that tax levy. So like, for example, if we use us, MSD of Wabash County, we sit at 83 cents, and we generate a little over $6 million, $6 to $7 million in revenue with that tax rate. And then you can look at another school corporation that may have a higher tax rate, but their levy doesn't generate as much. And again, that's a lot to do with assessed valuations and those types of things. So I mentioned debt service operations are local tax supported funds. So we look at those comparisons, and then we also want to look at what type of impacts we may see that may cause us to not generate all of that revenue. Some examples would be like tax caps, okay? Those taxpayers that hit the tax caps, those monies we don't collect those monies. So those are considered revenue losses for us. And so we factor that into the amount of revenue that we potentially may or may not get. Our tax cap impact for this coming year is estimated at $243,000. And again, that comes from the DLGF site, that comes from the county portion on the DLGF that kind of estimates those. And that's pretty accurate. I think we lost close to 180,000 last year, and it goes up every year as our assessed valuation grows. That also leads to more individuals reaching that tax cap. So the goal when we build the budget for the operation and debt service is to advertise a high rate and a high levy so that we can ensure that we collect the full amount of levy that is needed to fund our budget. So to do that, we advertise a low assessed valuation, which creates a higher tax rate, but that all gets factored out and evened out, balanced out once the true assessed valuation is determined, okay? So some things to keep in mind along with that, for debt service, there's really no max, so it's just dependent on the money that you borrow. For the operations fund, there is a max. That's determined through what they call the max levy growth quotient. So for example, our max levy for 2022 was $4.4 million. Our max levy for 2023 is $4.6 million. Okay, and that is determined, like I said, by the max levy growth quotient. So it went up 5%. So how do they figure that? If you go to the next slide. They use the Indiana non-farm personal income 6-year average to determine that, okay? And so as you can see, in 2021, we had a high non-farm personal income increase. And in 2015, we had a much lower one. So that's going to come off of that equation, that average calculation, to get to that 5%. So you can see it was 4.3%, it moved up to 5%. And you can see how it's dipped and ebbed over time since 1995. But you can see that's the highest, 2021 is the highest growth that we've had for a long time, which has caused an increase in that growth quotient. So I brought this slide up. We talked about this a little bit at our last board meeting when we were, or I guess 2 board meetings ago, when we were looking at cash flow. And I alluded to it a little bit when we were talking about cash flow from the education fund. So what this represents, this shows what our expenses were in our operational fund, okay? Expenses only. And a lot of those expenses do not include capital projects because we use our bond money to do those capital project expenses. But these were our actual expenses for 2020, 2021, and 2020 estimated too from that cash flow we just looked at. The revenue that we're showing are the actual revenues that we received from just the local property tax amount, okay? That is our biggest revenue source, is the local property tax levy, okay? So that revenue represents just that levy. The second major revenue source in that operation fund, like I mentioned earlier in our cash flow, comes from our education fund. So we're having to transfer at least this amount of money from our education fund over to our operation fund just to cover those expenses because the revenue from our tax levy does not cover it. Okay, and you can see that is growing and that will continue to grow over time, which just means we have to transfer more money in from our education fund to our operation fund, which could cause problems because then you're taking away monies that you could have for programming and salaries and benefits on the instructional side to cover those costs from the operational side. One of the things that our referendum project does is by moving from 5 buildings to 3 buildings, it helps us avoid some of those costs in the future. We're working on figuring out kind of what that, we won't ever get it exact, but what some estimated cost avoidances would be in the future. Some early calculations suggest that it's going to be around $600,000 to $700,000 that we would potentially avoid in cost by going from a 5-building district to a 3-building district.
And that would be per year.
And that would be per year. Whereas these costs are going to continue to be there every year in our current structure. So we're going to continue to face that challenge, okay? It hasn't been a challenge because our education fund has been healthy and our operation fund has been healthy. But the point of that is that our revenue still does not cover our expenses. And so that could be a big challenge in the future as things continue to increase and so forth. But I just wanted to highlight that a little bit since we're talking about operation fund levies and those types of things to just kind of get that process started thinking about as we bring out some other things when we share information in regards to the referendum and so forth.
Did you mention anything about the referendum as far as the capital construction /construction compared to operation?
Say that again.
As far as if we cost avoid $600,000 to $700,000 each year, that would be money that would not be transferred out of the education fund
Correct.
to the operation fund.
Right.
Which in reality, for a referendum, there are 2 different types of referendum. There's more experts here more than me, but it's either capital or called construction compared to operation. So in reality, with just having the capital or construction referendum, this would actually, in theory, help us with a operation referendum,
Sure.
even though we're not asking for operation referendum.
Correct.
Because it allows for more money to be in that account, in the education account, where we pay most of our salaries.
I would agree with that. I mean, this referendum, although it's capital, could also be viewed as operational in the cost avoidance that we would have, which would also help out our education fund.
If we're looking at a 20-year window on the referendum bill value, and your estimate 600 to 700,000, that'd be 12 to 14 million over that period of time.
Yeah. Okay. Whereas if we continue as such, then that number is gonna, continue to grow and build. And even if you used $1 million there, that's, I mean,
$2 million.
that's $20 million over a period of time, so
Or 20 million, yeah.
for that period of time.
But that's
we'll
for the
continue to
total,
spend.
that's for the total.
Yeah, that's for total. So just some food for thought as we talk about some of those things in the future. So boiling that all down, okay, then it gets into what tax rates will be advertising for our 2023 budget. So if the first two columns on the left represent what we did in 2022, so it shows what we advertised in 2022 and then what the actual was for 2022. And so in 2023, we're showing what we're going to advertise. So we're going to advertise a 20-cent debt rate and a 67-cent operation rate. So it's going to be advertised 88 cents. With the reality being, depending on what the actual assessed valuation comes in at, is if we use the estimated assessed valuation, and truly it's going to be more around 16 cents for debt and 54 cents for operations. And the debt is decreasing, you can see, from 2022 to 2023 because we're paying 2 bonds off this year. So for 2023, we only have 1 bond payment, which is about $2 million or so, just over $2 million left. And that would be our last debt payment at that point in time. So with that then, we'll have our budget hearing September 13th. We'll kind of go over everything that we went over in these individual meetings, put it all together, present that to the public, and then the following board meeting would be our budget adoption. Any questions with that? So since we're talking about tax rates, kind of leads us into our next presentation. And this refers to the referendum and the ballot question in particular. We knew the ballot question was going to be an issue. We discussed that earlier in one of our work sessions. But just so we can go over some things here, I just want to mention before Jim talks a little bit about it. We had a process that we had to go through and we had to complete by August 1 before we could get the ballot question put on the November ballot. So the ballot question was finalized and approved by the DLGF, the County Election Board, and the County Auditor. And that last approval was done on July 27th. It was released at some point by the Indiana Education Insight after that time, sometime in early August. The ballot question is not something that we create. It meets the parameters that are set by Indiana law. In Indiana Code 6-1.1-20-3.6. On April 12th, we had a work session with Ice Miller when we were talking about the referendum, and we talked a little bit about the ballot question. So the language and parameters of that ballot question were somewhat discussed during that, along with the complexity of that ballot question and how it's not really a true reflection of the individual taxpayer. There were concerns early on when we did the referendum that the taxes were going to go up 2 to 3 times what they're currently paying. So on May 31st, when we were actually doing our referendum hearings, Mr. Elizondo went through an example of a tax bill showing that indeed the tax was not going to increase 2 to 3 times. And so to help people better understand that, we created a tax calculator, right? And so that tax calculator was put on our website because that is where you're going to get your true reflection as the individual taxpayer of what that tax investment will be for this project. So then the ballot question comes out, and obviously our goal is to make sure that people are as informed as much as possible. We want them to go to the ballot with as much information so they can make an informed decision. And anybody that doesn't do that and goes up to that question, it's going to appear that everybody's taxes are going to increase by 124%. And so without any background information of that, most people are going to vote no. Like if I went to that and I had no idea what that meant, I mean, I'm going to vote no, right? So we want to try to make sure we're getting the most accurate, up-to-date information out there publicly as well as on our site. Our site is a very good resource for that information, especially with that tax calculator. So we want to make sure people use that and use it correctly. I think I've ran into some issues where I've helped people with that tax calculator that it's only as good as the number you put in it, the information that you put in it. And so if you put in the wrong information, the wrong number in there, you're not going to get what you should expect to get. And so I've worked with a few people on that, and in some of those cases, in both those cases, they still put in their gross assessed value, and that's not what's being taxed, it's the net assessed value. And so they get a lot different number when they use that gross assessed value than when they use that net assessed value. So again, I just want to reiterate the point. When you use that calculator, to make sure that you are using net assessed value. And that's what we're here for, to help as well, to walk anybody through that.
To follow up a little bit with that too, on the right-hand side, when you go to that, it'll say use the taxable assessment. And so when you first go into the tax calculator, for all of you probably know this, but maybe other people that are going to watch this later, you will see gross assessment first. And in the actual county website, when you go to Wabash County Government, but then the next one will be the taxable assessment. So it is the net, but it's actually labeled as taxable assessment that you need to do, not gross assessment.
So again, we talked a little bit about the complexity of the ballot question. I asked Mr. Elizondo to come and speak because in the law, there's a certain formula that you have to use that comes up with those percentages. So I asked Mr. Elizondo to break that down a little bit for us so that we can get a better understanding of that question. So,
Well, the question has never been written to help the municipality get through the referendums. They have always had various iterations of it, but it has always been a sticking point. This is a new question this year versus past years. In the past, this question would have read, are you willing to support this with a tax rate increase of 84 cents? And that's all there is. And it says the name of the project. So then the legislature decided, well, maybe they could do something that could tell individual investors, it's individual property owners, when they're looking at the ballot, what is my impact? Well, their attempt at this is trying to look at what impact does it have on the school corporation's tax rate, not the total tax rate that you're paying for a taxing district, but the school corporation's tax rate. And then it always will use the maximum payment that we talked about early that does not account for anything else in your debt service. So I'm going to go through a few things, and we go to the next page. Well, before we go, have you all read this? Do you want me to read the question? Okay. Then we'll go. So I kind of highlighted, I'm going to talk about three different things. How they calculate the average property value, how they calculate the average tax district rate, and then the percentage tax payment change. So we'll go to the next slide. Yeah, the average property value is a real simple arithmetic average. It's take the total dollar assessed value and divide it by the number of homesteads, or the total assessed value for businesses and divide it by the number of business properties. Pretty straightforward. not as much of an issue in calculating that because, it's pretty straightforward. That's a way to find an easy average of those values. I'm sure the legislature chose it because it's easier to calculate than doing some type of median or average, weighted average. The next one gets a little more interesting and I think has room for improvement. Again, it is simply an average, but the way they take the average is they add all of your total tax districts, your taxing districts. So your 9 taxing districts, we take the total tax rate for each of those districts, add those up and divide by 9. Gets us that average of $2.04. Again, it's easier to calculate. I'm sure that's why it went that way, but it doesn't give any credence to the weighting of value. So as an example, you have a part of that calculation is Pawpaw Township and how many properties are in Pawpaw Township versus how many are in Wabash City portion of your district. There's no weighting at all to the number or the value of homes. And so it makes it a little harder that, that simple $2.04 is our first issue when we try to look at it ourselves and figure out how much our impact's going to be. Because none of us have that none of you have that $2.04 tax rate. That's not one of the 9 choices. It's the average of those choices. So that becomes an issue, but that's the way the legislature dictates it's calculated. We have to follow very specific rules in calculating all that, and I'll go through that in a little bit. But next, the final part is the question. The question has to include the maximum increase on this project standalone. So ignoring anything else in your debt service fund, it's what is the maximum increase of this issue by itself. And that's our 83 cents. That's the total red section. That's also 83 cents at the AV assumptions we used. We're locked into that now. Based on this new AV rate, that growth, those numbers will be a little lower tax rate wise, but we have to live with where we are from the point we put this on the ballot. What you'll see and what you'll remember is we're looking at the actual impact versus 2021's rate is 54.17 cents, which is that incremental increase from our existing debt. So as our debt pays off, we've structured this in behind that debt. So if we look at a 2021 tax bill and tax rate, we're now looking at what's the incremental increase, not the full 83 cents, but that 54 cents. That does not appear in the question anywhere and hasn't ever appeared in the question, even though many school districts would have done this where there has been no incremental increase, but they still have to show in the question an increase of, let's just say it's the 83 cents. So it's always been misleading from the standpoint of a uninformed voter walking in. They would have no idea, and that's part of, I think, what Chris just talked about is this is that period where education of your voting public is very, very important to realize what that question says and doesn't say. Next, that we can't read, but I'm going to zoom in. So that's basically the entire worksheet that we use to calculate. And in this case, Policy Analytics did that calculation for you. And this is their worksheet. If we go to the next page, I zoom in and take looks at pieces of it as we go.
And this was done, sorry to interrupt, but this was also done with the county auditor too, because that's part of the approval process.
Yes, the auditor also has to, they'll run their numbers and compare it and have to accept that. So, so the first part of the item is we're going to look at the homestead page first, but this is the simple math. At the very top, we have 577,000 of gross assessed value for homes, 4,382 homesteads. That gives us our average house value. Pretty simple, pretty straightforward. From that, we take that 131,000, we take away the standard homestead deduction of 45,000, and then the supplemental homestead deduction, which is 35% of the remaining, that equals that 30,000. That gets us to our net assessed value of $56,378. So that's the number. If this particular home was using your calculator, that's the number you would be putting into the calculator, is that net assessed value. That's what's taxable. This formula takes that and divides it by 100 to just make the following math work, but basically that's the way we calculate taxes. We take your net assessed value, divide it by 100, and that's what we multiply times tax rates. So if we move to the next section.
I'd like to come back
Oh,
to
go
that.
ahead, please.
Well, I was actually going to.
Slow me down and stop me
No,
any time.
No, I was just gonna put, so what you're saying there too, though, on step 2, letter B, the 56,378, that would be that average. Like if that was someone's average, then we would plug that into the calculator, correct?
Correct.
Yeah, and just to throw that out there too, I'm putting that in the calculator right now. So that would be monthly of $25.45. So.
Write that down because I probably won't remember as I keep talking. But I want to compare that with how this generates it.
That's on 56.
And it depends on which tax district that's in.
Right.
Do you know which district that's in?
Uh,
Oh, no, you don't have to on yours.
No,
Never mind. You don't have to. But it will be interesting here. Next, we look at the calculation for the tax rate. And that's just as I described. We take all of the individual tax rates from $1.27 in Waltz to the high of $3.37 in Wabash City, Wabash County Schools, gets us our $18.39 total tax rate divided by the 9 districts, gets us our average cost or tax rate of $2.04. Again, I don't see $2.04 in any of those combinations. And that's where we start to run afoul of this being useful, as far as actually calculating, but typically nothing's going to be useful to that taxpayer that walks in day one without any education. They're going to be ready to vote, and the education has to occur before then. And then finally, the bottom half of the table gets to their calculations. So we go back, the 1,152 is the tax rate on that. That's the gross tax rate on the average property at that average $2.04 rate, gives us that $1,152. From that, you have a property tax replacement credit rate of 20%. You get that credit of $233, brings you down to a net $918.77 tax bill for that average home in the average taxing district. Then we looking at just the school rate. So this has all been on the total tax rate. Now the question requires what's the impact to the school rate. And so we look at the 83 cents, 83.60 represents your total school certified rate. We take that and figure out the share of that 918 that is school rate, and that's at $375.83. Then step 7 is the 83 cents. That is what we're talking about, the impact from the referendum, the gross impact. Okay? We take that 83 cents and calculate that. That gets us to $467. The math is simply how much growth is there from 375 to 467, and that's how they get that 124% tax increase. That is only on the school portion. If you were to look at your total tax bill, that number would be less because we're starting with a much larger starting point. We're actually starting with 918, and we'd be increasing by, 90 some, not roughly $90 over the 100, over the 1,000 or the 918. Percentage is noticeably different. Next page. What if we put the 54 cents in? The 54 cents, you can see that that changes this equation to show that it would be 81%. Again, much lower than the 124, but it also is only reflected on that school tax rate, not the actual tax bill that any of you would be paid on your total taxing district. So trying to say that this number isn't real relevant, but it has to be an educated voting populace that shows up, because there's nothing in the question that helps you. If we go to the next page,
Let's
oh, go
go back
ahead.
just a minute. If you take the 467 minus the 375, that's a $92 increase. You divide that by the 375.83, that's a 24% increase, not 124.
Right, oh,
So, and that's misleading right there.
oh, yeah, no, it's, the math from our legislature.
Okay.
I wish I had some answer for that.
It should be 24, not 124.
And then, do you have your calculator, take that same 90 something off, over the 918,
The 92 over the one?
over the $918.77.
Which would be the whole property.
Would be your whole property tax on that average property. So,
Divide it
yes,
77.
10%.
About 10%,
yeah, I mean,
Yes.
So it's actually a 10%,
10% increase.
even at those inflated numbers.
the way you and I would look at our bill, but,
Yeah,
yeah.
when you measure out your checkbook at the end of the day.
So, going on business, we do the same calculation. The only difference in the business, there are no homestead credits and exemptions, so we then move back to the same page. I do the same exercise, that goes from 99 to 64. Go to the next page. That's what the question might look like if you really use the 54 cent number. But again, going to the final page, I believe the only way you and your voting constituents can find out what's really impacting them is to get to that calculator. I mean, you know, for the reasons I said. The calculation of the average value is pretty straightforward. The calculation of the average taxpayer is not, and then the growth calculations, or the increase calculation is very misleading. So, I wish there was a better answer. It's not a good answer, but I think Chris wanted me to come and just reiterate, or go through and help us understand, but then reiterate that ultimately your best tool is word of mouth in your community and getting to that tax calculator. Now, tax calculator is not completely perfect, but it's pretty close. So you can get into there and get a much better feel for what your tax bill might look like. And then realizing with your AV growth, things should actually be better than that, but, you know, that's more just a side note as far as, you know, what it's looking like in the future.
Okay, I'm gonna ask a very dangerous question, because I'm not going to be a lawyer here and ask you a question I already know the answer to. So, I'm totally, I could be.
Instead, he's gonna ask the finance one, what do you want the answer?
Well, all lawyers are known to ask a question you already know the answer to. I don't know the answer to this question, so it could blow up in my face. But, so on the tax calculator, and I feel like that's still the best tool, and you said that, you know, there's some shortfalls and pitfalls. One of the things that I hear a lot in that tax calculator is that when you go to the site for the tax calculator, it is for the last published and collected tax year, not for what people just recently got in the mail telling them how much their taxes are going to go up. So they see, you know, their assessed value going up. And so they see that as we're being deceptive, when it's the most accurate information that we have. My question then is there a way to gauge based on what that went up to this year for the assessed valuations of how much to Okay, so yes, this is how much it says it's gonna go up, but because of that slight difference, it might be just that much more. I'm sorry? Actually, you probably will be less because of the fact that. Because the
There's one
assessed
part-
value went way, yeah, I didn't even think about that. With the assessed value that's going to clear up, that's gonna, we've been talking about that all night. That the higher the assessed valuation is, the lower that tax rate becomes. So for people who are concerned when they plug that in and go, well, that was last year's tax rate. Well, this year we have an assessed valuation going up, so that tax rate's actually gonna come down a little bit.
Yeah, so that's excellent point. The tax rate calculation would be a lower tax rate. However, when we have a reassessment or an increase, it's a allotment of taxes among taxpayers. So you may have had an assessed value that went up 10%. Yours may have gone up 3%. Yours might have dropped 1%. And that becomes a new alignment. So if your assessed value individually grew greater than that average, you may not see a decrease. If you grew less than the average, you may. So the problem is we don't have that solution. One possible solution, if you do receive your reassessment and have access to your note, I looked at mine and said, I'm not going to challenge this, so I threw it away. If you have yours, that is a better number than going on online. Online will catch up. Now that we have the new certified rate out or assessment out there, we know those numbers are back there someplace. It's how quick will they actually get into a usable database. But so yes, but no, there isn't a good way that I would feel comfortable saying, well, decrease this number by 1% or something. It's just with that much of an assessment change, some of it's new property. You know, there's a new property or new businesses added something to their others. It's a pure change in your assessment, or in your neighborhood, a bunch of houses sold at very attractive prices. And in others, there were no sales, and, so it's a little tougher that way to be able to pinpoint it. And that is one of the weaknesses in that calculator is it's only as good as the data we can put in it.
My problem is the two guys across the street putting tons of money in their house, so.
Another clarifying question, Jim. I think some people are also under the misconception that if the impact would take effect immediately in 2023. And so, just for some clarity, when would that impact take place if the referendum passed in November?
We are projecting if the referendum passes in November, we would sell bonds sometime in 2023. So the first you as a school corporation would be able to levy taxes would be in 2024. So we're still out a little ways, and we don't know whether that will be an incremental step or the full piece. It depends on the schedule and things like that. But the first unless you sold bonds this year, there is no way to put anything on the tax roll in 2023 for this project.
And we wouldn't know necessarily what our bonds that we would take out would be until we get bids and those type of things, because 115 is the cap, which includes not only the new school, but the renovation of the 2 high schools. So it could come back less or
Yes, and for those of you,
not to exceed.
you were all with us, but during the project hearings, again, we set those as maximums and the payment stream as maximums, with the idea that if there's ability to borrow less, borrow on a different repayment term, shorter, whatever, all of those things could potentially bring that down. The biggest impact would be if you borrowed less, just like with our home mortgages. It's more of the amount we borrow than the final interest rate, makes the biggest difference in that payment.
And that 115 only includes the renovation of the 2 schools, but soft costs and other contingencies too.
All of the costs that would be used up front. It does not include the interest. The interest is in that payment stream. The interest is in that 84 cents or 53 cents.
Right.
Or 83 cents, 54 cents. But as far as all costs are included in that 150.
How does the borrowing, Jim, on bonds line up with the expenditures then when it's over a period of time? We don't borrow all the bonds at once.
It
We
can-
block them.
It can vary, depending on the markets, depending on if you have bids up front. Typically, on a brand-new school, you would probably borrow most of it up front or all of it up front.
Where does the school corporation park the money then?
It would be with your trustee bank, and then you could invest it. And with today's short-term rates, there would be, construction earnings that would occur to offset some of those costs. To the extent you ended up with your architects deciding that the new building would occur completely ahead of the renovation, so you had places to move everybody, and that's a very much possibility, I don't know. You could phase that by selling, enough for the new construction and then wait a year or two and sell for the other. There are some, it depends on the market. If we think the interest rates are going dramatically higher, you don't do that. But if you can wait, that's less interest you're paying on stuff you aren't spending on, as well as it pushes you a little further down the road in amortization. So we still could borrow no more than 20 years, but maybe overall that's 22 years of amortization instead of 20.
Yeah, so that'd be an important decision we made.
Yeah, no, and I think that's will be very important as you develop the final plans and work with the architects on how that phasing, all that fits together. It's different today because we can actually earn something on the money. If we were parking $110 million or $115 million away to spend over the next 2 to 3 years when we were earning nothing, that's different than today, earning something reasonable on the short-term reinvestment rates. So,
Reasonable.
what?
No, you define it as reasonable.
Yeah. I'm coming from a long history of us not earning anything on the construction funds for a
All
while.
of that would skew the tax impact then.
To the
The
extent,
decision that makes.
oh, you're exactly right. To the extent we took a very conservative approach and did not account for any construction fund earnings. But to the extent you earn there, that is additional construction funds
But if you chose
available.
not to borrow maybe only 80 million,
Oh, yeah.
it would, yeah,
And the way you could structure it together, yeah.
yeah.
Yeah, no, those are all, we tried to go as conservative, to give you those choices, but, you're exactly right. Those are items you as a board will have to decide as we get further down the road.
I have a question underlying under all of this, is the agriculture farmland, does it come in similar to that 80-some cent actual, or? Because where we sit, that's a huge component of the property tax, is the agriculture land.
What I haven't run any individual farmlands, but I know the base farm assessed value that you then calculate your production values off of on there has gone up this year, and the projections, talking to Larry Moore.
I'm just talking about that 124%,
Oh,
and then the business at 90, whatever it was. What's the agriculture look like?
I haven't run that. We can try to give you a rough idea. Like, I will have to, the hardest part will calculate the kind of an average, because that again is something policy analytics has all that data for. But I think we could
That's a big,
get that
that's a
for you.
big question.
Okay.
That we encounter.
Okay.
Personally, I've got it at 64%.
Okay.
Now, the accuracy of that, I told somebody earlier, my math, But it would be interesting to know, and yes, I agree, every parcel is different.
But at least you
But
know,
that's almost 50% of what the ballot's gonna read on the residential piece.
I find it interesting that the legislature only chose those two categories. Now, they are the two extremes, the 1% and the 3% properties, rather than the 2% properties, but we can, we'll talk and see if we
Yeah,
can figure out
if you would,
something.
because I think from prior discussions over the past years, it's about 40% maybe is that contributing component would be agricultural land.
Okay, we can try to do some more research on that, at least have that as information for you. It obviously won't be in a question, but it'll help you as a community prepare for the vote.
Yeah, it should actually be on the ballot question too.
I mean, that's the part that's surprising to me, that
Why
they
not?
chose the two and not the third.
Because they live in the city.
They're our friends in Indianapolis, that's why. Never mind. Not really our friends in Indianapolis. Oh, I'm on TV now.
Jim, I have a weird question. Are there other calculators out there? Like, does the DLGF have a calculator? Does,
The DLGF will put a calculator on there.
okay,
And again, that calculator will be biased towards the 83 cents.
okay.
It will not, it will.
It does not factor in the
The
debt that's
other
called.
debt,
Okay.
the
So
rest of
our
the,
calculator is the one that needs to be.
the rest of the calculations will be very similar underlying it. They typically don't, in your case, it's gonna be very similar to the extent it's, your district had tax cap implications and things like that. Their calculator is a little different in not addressing all of that, but the idea that they'll be looking at the 83 cents.
Yeah.
Is there a reason we wouldn't want the public to use the new assessed valuations if they have the preliminary ones out? Because we will,
Won't that be high because the tax
It
rate is
will
so-
artificially increase their tax impact from the standpoint that the 80, or the 54 cents has not been modified downward because of the AV.
right.
Yeah.
So we have no benefit that we're going debt-free in a year.
Yeah, well, you'd still have some benefit, but not the full benefit.
Wouldn't be reflected on their calculation. So I would stay to encourage people to stay with the 21.
Yeah, I mean, and realize that that probably will, you know, it probably is still going to be higher unless you're one of those properties that really grew AV-wise individually. Just because the tax rate will, the tax rate, that 54 cents realistically, let's just say it went up to 50 cents. You take your same AV, you have a lower payment. If you tried to make the adjustment, you might be the same, you might be higher, you might be lower, but I think you're right. The only one part of the equation would have been changed if they use that new AV.
So it's reasonable to say with the 54% or 54 cents that the school portion of the property tax will go up 80%, but the overall property tax that Mr. Driscoll figured out would be closer to 10, 11% for the overall property.
According to the way we look at that, yes, and the 84 or the 80%, based on their calculation would be more realistic. But when you look at, I think it's important to remember, it is your total tax rate that you're actually all looking at your bills. None of us pay our bills separately, a check to the school, and a check to the township, and a check to the,
Right. So the 80% is only the school portion of the property tax, not the overall.
But in the end, to have a true reflection of the individual taxpayer, you use the tax calculator.
Yes. Can't stress the tax calculator enough.
Any other questions for Jim? Thank you, Jim.
thank you.
Thank you, Jim.
We'll talk to you soon.
Okay.
Thank you.
I'm sorry, I do have one more question.
Oh, sorry.
I'm so sorry.
Oh, that's good.
We were talking. So I met somebody in the community who hasn't met you yet, and so she was questioning, just how trustworthy and reliable this data was. And so you mentioned earlier that some of this is verified by the auditor.
Okay, so all of the question and all of that table you saw, the auditor has gone through and verified all of those. items as part of the certification of the question, the process. The school submits their question, submits the data, they then verify it and have to sign off on it.
I tried to convince her, but
Okay.
having an auditor will be even more helpful.
Tim, also Policy Analytics was
Yeah.
another company that helped too. So we have 3 different layers here that made sure that this was accurate information.
And actually, the basis to a lot of this, the policy analytics, has every parcel in their database. And so from that standpoint, they did a very deep dive into the assessed value side and the calculations of the averages and things like that.
Thank you, Jim.
Thank you.
Thanks.
Okay.
Ready for this?
Yep, so then the last thing I need is just approval to advertise the Form 3, which advertises our tax rates that we went over earlier, and then advertises when our budget hearing and budget adoption times are.
So we have a recommendation to approve the advertising of Form 3 in Gateway.
Make the motion that we approve.
So
Motion and second to approve the advertising of Form 3 in Gateway. All in favor, say aye. Okay. Moving on to personnel. Under resignation, we have Julie Gogolewski. I think that's how you say your name, Julie. Sorry if I am wrong. Cook at Sharp Creek Elementary. Also under resignation, Rebecca Metz, cook at Northville High School. Under employment, we have Tim Morissette, bus driver from the South. June Fields, cook at Southwood Elementary. Amanda Watson, athletic secretary at Southwood High School. Tammy Tucker, health services assistant. And Jeanette Lyons, paraprofessional at Metro North Elementary. Under transfers, we have Katie Singleton transferring from long-term sub to full-time teacher, and Kelly Taylor transferring from health service assistant to health service supervisor. Under leaves, you see those for the dates and times for those employees, 140, 141, and 142. And then under coaches, this is for Northville High School for this year. Carlos Delgado, varsity assistant softball, and Faith Lemming, assistant cross country.
I move to the slate.
Second.
Motion and second to approve the personnel recommendations as read. All in favor, say aye.
Aye.
Reports, Heartland Career Center. Matt, do you have anything for us?
We had a short meeting the other night, but the highlight of it was the number of students that are enrolled. I give you a piece there. 627 students are enrolled at this present time. And then go across the bottom there, you can see how each school has quotas and so on. But they're packed to the gills. So the future growth there has to be some way to get more room. There's a lot of kids that were turned down because of not enough space and specific programming. So it's a good problem to have kids wanting in there that bad. 2 years ago, we were just hoping for 500 kids. So it's a lot of growth. That's it.
Superintendent's report, Mr. Keyfaber.
Yeah, I just want to mention a couple things. First of all, of course, with the information that's been talked about tonight, we still want to make sure that we are directing everyone to the tax calculator, our referendum page on our website. It's very important to read a lot of that information and be informed. We will have some different meetings to actually answer more questions and actually talk more about this. We'll be at several football games, volleyball games. We'll also be at a cross-country meet. Then going to giving some tours of some classes, some golf outings. But specifically, if you want to come and really hear some of the other presentations that will have even more information, the first one will be on September 12th at 7 p.m. at Northfield. And we just are calling those new high school project informational meetings. And then I'll read one more and then we'll wait on the other ones till later because we'll have other board meetings. But also on September 17th, I'm sorry, that's the actual Wabash Founders Festival Parade. On September 24th at Southwood then, We'll also have a meeting, that will be at 9 a.m., that's on a Saturday. And so those people that are not available in the evenings, we also have a couple of Saturdays here too. So we've been sending that information out. It's on our website, it's on Facebook page, it's on an email that's going out to over 6,000 people. So we're just trying to get that information out to make sure they know that they can get the information. Because again, we want people to be informed prior to November 8th before they go and see that ballot question. That's all I have on that.
Mr. Gregg.
Yeah, I have shared a report with you with our SAT scores, just to kind of catch up, because so much in the testing rule changes so often. The state of Indiana replaced the I-STEP for high school, for school accountability, and for graduation with the SAT. And so I'm just going to read this to you here. Indiana is going to use the SAT to fulfill assessment requirements listed in the Indiana Code for high school accountability. Obviously, this is the SAT we're familiar with. It tests mathematics, reading, and writing for juniors. Other kids can take it, but the schools will be assessed based on how their juniors do, or their 10th grade, or their 11th graders do, I should say. All students are expected to participate. Schools that have at least a 95% participation rate will not receive punitive measures. And so if you choose not to test juniors, then as a school, you're held liable for not testing those. And so the 95% threshold is what's set there. A caveat that we should all keep in mind, while high schools are held accountable for these scores, the Department of Education has allowed students to find other ways to graduate, which is a good thing, right? Not every kid is going to go to the SAT to get college work, because like Matt just mentioned, the Department of Career Center gives kids great career jobs. However, those students are still expected to take the SAT. Right? And so they don't have to for their own graduation purposes. They can graduate with a career pathway through Heartland. However, our schools are held accountable for how those students perform on the SAT. So I think we understand that might impact the scores negatively. Even still, it's a data point that we'll try to use. And you can see here, these are the spring 22 results. And so this is relatively recent. It's always hard when they do the colleges, because that's so many years for them to collect that data. And I can tell you, for roughly comparison purposes, the Department of Education didn't give us percentages of students that participated, but I do have student numbers. And so Northfield and Southwood together tested 120 juniors to produce that result. Manchester tested 116, and Wabash City Schools tested 109. And so we tested the most juniors. Who knows what percentage that turns out to actually be for those schools. I want to say we had all but 2 juniors, and I wouldn't put the principals on the spot, but I'm pretty sure we had a very high participation rate. Some kids were sick, and because it's the SAT, there's a very tight window when you can offer those. And so if they're not there, they're not there. And we have students in the old Rise School classrooms that will be counted as juniors, and we might not test those, but it was a pretty high percentage. And so you can see there, obviously we'd like for those to be higher. And so principals are aware of that, and it is a part of our conversations to try to prepare students to do that, even knowing that some of these students that take the test, it's not a part of their future at all. So
It'd be hard to motivate them to do well.
They could just go in there and just mark.
It's a 3 or 4 hour test. And so that's a challenge for most students anyways that are driven to do well on it, and students that see no reason to take the test.
And it says percentage meeting the benchmark. What's the benchmark?
Yeah, so the SAT, the College Board sets a median rate, and so that's typically the 50th percentile for the whole globe. And so that is what Indiana typically has chosen to use for its benchmarking. Roughly 1080 out of 1600 is generally it, but it will change based on how the average student does, or excuse me, the student average, not the average student. So anyway, I just want to keep you updated with that.
All right. Moving on to new business, we're going to be discussing the Northfield, Southwood, and White's junior, senior high school improvements plans.
Yeah, originally they were gonna read each of their plans.
They still can, it's some short meetings.
It's a really quick meeting.
We thought we would do something a little bit different here tonight, though. So we're just gonna do it in alphabetical order, so we'll start with Mr. Snyder, Northfield.
All right, well, I thank Mr. Drake for prefacing, but we have two main goals. Out of all that, what we're working the most on is two main goals. Number one, academics, the two things the state looks at. For 7th and 8th graders, it's iLearn, and for juniors, it's SAT. Starting last year. Last year was the first time, like he said, that all juniors, and it's good, because kids don't have to pay for it, they don't have to do it on Saturday. There's a lot of benefits to it. Negative is, we got a lot of kids that don't plan on, they go right to work after graduation, they don't care how they do on it. And so, keep them in perspective. So like Northfield, 47% of our kids were considered proficient. State average was 49. I'm not happy with that. Everybody knows at Northfield, we want to be at or above the state average. But I'm not going to name names. You can ask me after the meeting. We had one kid who's very, very intelligent, couldn't take the test that day. If he would have been there, they would have been there. We would have been at the state average. It's a lot of times, it's one or two kids that, so no fault of theirs, but they know because their mom and I even talked about it. Come on, get back to school. But that's the way it was. And that was for the English part, 47%, state average 49. So we're right there, but we want to be at or above. For the math test must be really hard because the state average of juniors being proficient was 30. We were 28. But again, one or two students when you put it in perspective. And that sounds really bad when I tell you those numbers, but then you look at the state average, and then the whole nation was also 30% on the math. So our kids aren't doing too bad. And you got to remember, we're in a part of the country where I believe it's hard to motivate. We got, in perspective, we have 55% of our juniors and seniors utilize Heartland, and they're looking at careers and entrepreneurships and going right to the workplace. So to motivate them is a challenge. You guys were shaking your heads when Tim was talking, so you get it. So I won't go into that stuff too much. So how are we going to improve that? Number one, look at priority standards. There are certain standards that obviously are tested more than others. So instead of trying to teach all of them, Tim's had created a document to help us identify what should we spend most of our instructional time on. So that's one way. And then the other way is content area literacy, especially on that reading part. The new state standards, I don't know, Tim's probably told you, 60 to 70% of those reading standards are nonfiction texts. You get a lot of your literature in English classes. Where do you get your nonfiction texts? Science, social studies, math. Those content areas become very important because those periods those kids are in there. That's why we got online textbooks, and Mr. Drake just helped us get physical textbooks back in social studies and all those different content areas because kids need to be able to be, they don't take those home and read them at home. We got to spend school time digging into those and teaching kids how to get information from nonfiction texts. So those are the ways we're going to try to get up and above that state average. The other goal we have is school environment. In Northfield, Mr. Ellsroth worked a lot on this, and it was that way before I got there, but I worked on it at Sharp Creek. And that was working with the state to be designated a family-friendly school, doing the things that make people feel welcome and all those kinds of things. It's not hard to do, but it's nice to get the designation. And we did a lot of school safety things. We still do North's Honor, where you'll see on our Facebook page once a week, we're highlighting a student that did something great around the school. And then student councils, planning activities for the student body. I guess the biggest thing for school environment and climate right now, you guys did when you told us we could quit contact tracing last year. Because we've had more kids in the building, and my personal opinion is that's the right thing to do. And giving more power to parents and keeping kids in school. And that's really helped the climate, and it's been less stressful to parents, students, and staff. And then closing comments, I guess. School's off to a great start. One thing we're going to change at Northfield is kids need hours for like Honor Society and Key Club. And I think Southwood's already done this, but Mr. Finnicle has something set up, but with the new AD and with kids now being able to do more things because of less restrictions, we've had our custodian have to go out after Friday night football games and have to pick up trash and stuff that doesn't make it in the trash cans. And now we're making it easy hours for the Key Club and Honor Society for service if they stay after football games and help, and then all the custodians have to do to take care of. So little things like that is really helping culture and climate. So we have those two goals: school environment, just keeping morale of the kids and staff up, and then the academics with the priority standards and content area literacy focus. That's about it. That's the nutshell of the however many pages of it.
I was tired doing that, so. All right, thank you, Mr. Snyder. Mr. McDaniel, you're up.
I did have a 54 slide presentation. But I did want to talk about the changes that we've had this year. So we have a new assistant principal, Mrs. Johnson. She did her internship, her administrative internship with us in the office last year. And so she's been a pretty seamless transition into the office into that role. She's still retaining the internship program. So we're getting our money's worth. So Dr. Kuhn smiles over there. We also have a new math teacher coming over from White's, Josiah White's. We have Amy Oprisic, and she's doing a great job. Amy Wilson is fulfilling our special education teacher's role. We did a change in the way that we handled special education coming into this year with the addition of the 6th grade. If you think about the building, we have a lot of tests, a lot of curriculum, and a lot of differences in our kids from that age range of 6th grade to 12th grade. And so it's an easier responsibilities list to have a 6, 7, and 8, and 9 special education teacher, and then a 9 through 12 special education teacher. And so Amy Wilson has taken over that role for the 6 through 9, and she's just a mother hen to those little 6th graders. She's doing a really great job. We really like her. In PE, I wanted to find a teacher as good as Dan Snyder, and so I got Dan Snyder to come back this year to fulfill that role. And we've also gotten a new 6th grade teacher in Chloe Kendall, and so some wonderful additions there. The 6th grade has come into the building. We did a lot of planning for that last year, and transition has been pretty smooth. Every once in a while you find something that you didn't plan for or you didn't consider, but we're rolling with the punches and doing pretty well. The main complaint that I've had is they're a little noisy in the hallways. So the other thing is Steve Hawley was their hero the other day. We put in a Gaga pit. I shouldn't say we, Steve Hawley and his folks, his crew put in the Gaga pit. And so that is an intense, incredible environment for the kids. So I'd also like to talk about Mrs. France and the work that she has had in several weeks over the summer. We've had nearly 30 new enrollments, and she's in charge of enrollments. So these are kids coming, either moving into the district or kids who are choosing MSD or Southwood over other schools that they could go to. So I'm really appreciative of her efforts. And so, Mr. Driscoll, you mentioned Heartland Career Center bursting at the seams. Our 12th grade crew, we have 63% of our 12th graders accessing classes at Heartland, 45% of our junior class, and then 16% of our 10th grade class. And so we fight for spots. And so we really advocate for Southwood kids to get those spots. In our school improvement plan, we have a mandated goal of being better than average with the island scores. And so the 7th and 8th grade, well, 6th, 7th, and 8th grade, math and language arts in particular. And so we've done pretty well with the 7th and 8th grade, with the exception of the 7th grade math, didn't fulfill that state average. But we also look at our graduation rate and our attendance rates as well. Want to take a look at last year, we really hit home on the issue of students failing classes. And we tried some new strategies. One of the things that helped us out, Jay mentioned kids being in the classroom. So we didn't ask teachers to change necessarily their assessments or their standards. But we met on a regular basis, grade level teams talking about kids and their specific issues and how we can touch base with those kids, how we can maybe just nag them if that's all that they needed, or a phone call home. So I would like to tell you, Q1 failing grades, we had a 32.5% reduction in failing grades on Q1 grades. Q1 failing grades. Q2 failing grades, 29.5% reduction. Semester 1, 30.4% reduction in failing grades. Q3, 15.9% reduction. Q4, 26.6% reduction in failing grades, and then semester 2, a 22.6% reduction in failing grades. And so I guess to sum it up, we're off to a great start. We're busy. We're running around. I am now a high school, middle school, and elementary school principal. So, but they're great. They're fun little kids, and we're rolling with the punches, and we've got good people in place, and so I'm really encouraged by the way the year has started.
Okay, thank you very much. Taking some notes, there's some good information here I'm going to ask you about later too. And for Northfield too on that. So now we're ready, Mr. McDevitt at White's Junior Senior High School.
Thanks, Mr. Keyfaber. Really, we have two main things that we're working on at White's. And I think everybody here knows, essentially, we have two different groups of students we serve. The students that live with us residentially and the students that we work with in our online credit recovery program. So even though the goals are similar, there is some distinction between those two little umbrellas. But so number one, our primary goal is to try to help as many of our kids graduate. Certainly, you know, if we compare our scores to any other school in the state, they're not going to be good. Now, we still have goals there, and it's not that we don't work on, but ultimately we're looking at the finish line for our kids, and that includes both the distance ed kids and the kids that are with us residentially. And that is to either one, help them to get to the point where they can graduate, or get to the point where they've caught up to where they need to be for their age or for the work grade they're in. So our goal for our graduation rate, this is going to sound pretty low, but for our kids, it's a good rate. It would be 67%. That is where we want to get to. It looks like we're about 55% this year, which is about where we were at last year. So we've got work to do there. And so the key component for us, as we were talking about SAT scores at Northfield and Southwood, our kids aren't going to graduate with their SAT scores. And so in box 3 is where we have to focus. And the hard part for us, we can't send our kids to Harvard to get those career concentrators done. That's not an option for us. However, really, Mrs. Boone and her team have been a big part of this. Tanya actually has been a big part of this, of just exploring avenues where we can get career concentrators. And we do have one that we think will work well for distance ed, and that will be fully implemented this year. So we do anticipate that's going to help our kids get to a place where we can get to that 67% graduation rate. It's just, I think everybody here understands that kids residentially really can't go to Heartland. Is it possible? Yes, but it's hard. And then, of course, the distance ed kids, that's not an option. So we do have, again, it's a business career concentrator that can be done all online that we think could really help us move the needle on that graduation rate. So that's our primary focus at White's, both really with our kids residentially and the distance ed kids.
Okay, thank you very much.
Okay, so we have no unfinished business. Moving on to board policy, we have this.
Well, let's go ahead, if you can approve those plans we need to have.
Oh, we do need to approve those.
Yes,
Okay.
and it doesn't say that other, I should have had
Okay.
that on there.
All right. So at this point, we have a recommendation to approve those plans.
So
Second.
A motion and second to approve this, to approve the school improvement plans. All in favor, say aye.
Aye.
Okay. Now we'll move on to that board policy. It's the second reading and vote for the school board policy number 3160 as revised as per the Indiana code there that you see. And I'll let Mr. Keyfaber speak to that.
Yeah, just the two things that were mentioned and they're highlighted. I'll blow it up a little bit later. So, or contracting with was added to this policy that was already in our school board policy 3160. And then also at the end, just the word immediately. And then, of course, the legal reference of Indiana Code 2026-14-9B. So recommendation after the second reading here to approve this policy.
I move to approve the policy.
Second.
Motion and second to approve the school board policy 3160 as revised. All in favor, say aye. Public public comment for any items. Okay. Any items from board members?
Yeah, I've been sitting here thinking about that 21 assessment versus that 22. I just want to reemphasize, stay with the 21
Yes.
because you're getting incomplete. And if anybody's still watching this late.
It's
I
recorded.
just needed to say that. Stay with the calculator.
Well, yeah, and and I think we get this from Robin Winston. Now, obviously, this question was developed by legislation, and so he made the point to be funny is that no one wants to believe what the government says, but when the government puts something like this out, then everybody wants to believe it,
Yeah.
All right, any other items from board members? All right, well, hopefully people are still watching because I have a prepared statement I would like to read. On behalf of the 2,217 students and the associated parents and guardians, teachers, and staff who selected the Metropolitan School District of Wabash County as their educational choice, we wanted to respond to a recent letter published by some members of our community. The letter advocated for educational reforms to ensure a positive future for our community and for our schools. Our goals as board members of MSD of Wabash County are to be inclusive, transparent, and make decisions that are in the best interests of our students, both those enrolled now and those who will join us as future graduates. That is why we embarked on a series of community meetings in the fall of 2019 and continue to receive considerable input before presenting the public in 2020 with a long-range strategic plan for our Wabash County schools. That plan realizes the goal of Dream Big, a key element of our commitment to public education here in Wabash County. It was predicated upon making sure that we offered the taxpayers of the community a vision that provided quality educational options, maintained a priority on the use of tax dollars, and charted a future that used all of our resources to dream big for our students. That plan zeroed in on several tangible and realistic goals. First, we will continue to develop and enhance quality programs to improve student achievement by ensuring that our curriculum offerings prepare students for life after graduation. Our students will continue to achieve at or above the state level on various measurement tools. Second, we will continue our efforts to attract and retain students. That means we will develop the organizational capabilities to expand our marketing and branding for the Wabash County school community and highlight the quality of life in Wabash County to attract new families. Third, we will build upon our strong financial resources and ensure fiscal responsibility and stability for the residents and taxpayers of our community. By doing that, we will recruit and retain highly effective faculty and staff and continue transparency on fiscal obligations and solutions via all operations. Finally, we made providing safe and efficient learning environments a significant priority. We researched ways to optimize facility utilization and security. We explored ways to reduce duplication and increase efficiency. These potential upgrades would support our students in the classroom and save taxpayers dollars by making the investment needed now and not delaying them and facing spiraling costs in the future. Those reviews led us, as the locally elected school board, to make the decision to invest now in a new high school with the goal to make our Wabash County schools viable and sustainable for our community's future. The new high school will continue to combine the latest in designs to ensure constructability and sustainability for generations. We will make better use of our facilities. We will offer our students the latest in the state-of-the-art classrooms. The new high school will be a welcome front door in our effort to make Wabash County a place where our present families will want to continue to live, and an inviting place for future families. The new high school will be ready to serve our community if voters approve in November. We realize and agree that every one of us, both the public and private sector, should work together for what is in the best interest of our children. Our Wabash County schools are ready to turn dream big into reality. We welcome the active support of everyone to help us achieve that goal for this and future generations. Thank you. And that is on behalf of the entire school board. Any other items from board members? Return.